This is Kira Brecht, and I'm here with David Boehm, President and CEO of Blanchard & Company. And we're here today to talk about the gold market. Thank you for joining us.
Hey, Kira, thanks for having me.
So, 2016 has been really an amazing year for the gold market. At one point, it was up over 20%. So do you think this rally can continue into 2017?
Yeah, 2016 has been great for the gold market as a whole. Investors are starting to realize that they need to have gold in the portfolio to protect themselves on what lays on the horizon. And I think 2017 is going to be even better for the metal. So we have a lot of positive things going on, and we think we're going to have even more going into 2017.
Yes, there's so much going on. I mean, the election was such a major surprise to the pollsters and the media, and now the Republicans control Congress as well. Does this set the stage for some real change for the economy next year?
I think it does. It's been a number of years, I think in the last 70 years, the Republicans have only held control of both sides of Congress and the presidency in maybe 6 out of those 70 years. So I would expect some changes over the next 4 years. And what that's going to be, I don't know. What it's going to be for the financial markets, I don't know. Certainly a surprise to see all three go the Republican way. So I think that if you're an investor and you see what's on the horizon and you realize, hey, I'm not really sure what's going on. There's a lot of uncertainty out there. Gold certainly plays a role in portfolios when there's uncertainty out there. And I think right now there's probably more uncertainty than there ever has been.
What about the potential for inflation? I mean, in recent years, there just hasn't been much, inflation in official government numbers. But already, the Treasury bond market is starting to signal that there could be some inflation coming down the horizon. There's a lot of talk that some of Trump's policies, his proposals, the big spending plans could potentially, stoke inflation. What are your thoughts on that, and what could that mean for gold?
The only reason we don't have inflation right now is because the velocity of money is so low. It's actually been historic lows right now. And some of the policies that the president-elect has thrown out there are certainly inflationary because of the fact that it will speed up the velocity of money. For instance, if you look at his infrastructure plans, that's really going to get money into the hands of workers who then are going to go spend money. Those people that they spend money with are then going to go spend money. And that cycle is what we've been missing since 2008. Really, the amount of money that's been created since 2008 has been held up with the banks, and because of that bottleneck, it really hasn't hit the overall economy, and so it really hasn't moved from one person to another, creating more demand for goods, increasing those goods prices. So I do think that the policies that President Trump is going to implement when he gets into office is certainly inflationary. And as we know, gold is a good hedge against inflation.
Right, absolutely. And what about the geopolitical front? Historically, gold has acted as a strong safe haven and a flight to quality investment during periods of, all sorts of uncertainty. Are there any kind of hot spots around the globe that you're keeping an eye on right now?
Well, I think Syria is something to keep an eye on. We certainly are at odds with the regime over there. We're at odds with Russia, and it doesn't take much for that glass ball to fall and for the price of gold to go through the roof. So that's something that we need to keep an eye on, and the Middle East as well. Everything over there is very volatile, and it doesn't take much for an incident to occur, which during that period of time is when people go into safe haven assets like gold. So yeah, we're keeping an eye on it, and investors should keep an eye on it. And if they're worried about it or think that the conflict could escalate, then gold is certainly an asset that they should have in their portfolio. We need to keep an eye on China and what's going over there in the South China Sea. And so those are two really hot beds, and they've got other superpowers that are involved. And if something happens over there, investors will flock quickly into gold as a safe haven.
Yes, no, and we've seen that already a few times this year. Right after Brexit, a lot of uncertainty fueled a big rise in gold, and so that's historically how it acts. What about interest rates? There's a lot of chatter now that the Fed is maybe finally going to raise interest rates in December. But, there's still a lot of countries around the world have negative interest rates. How has that been supportive to gold?
Well, let's look at our Fed first. This is following the same path as they did last year in 2015. All year they talked about how they're going to raise rates. Everything was pointing to the economy getting better. They're going to raise rates. And they really didn't until the very last meeting of the year, which is very similar to this year. It's almost posturing. It's almost like they have to raise rates because they've told everybody over the last 11 months that they are going to raise rates. However, by raising it by 25 or 50 basis points really is not a sizable change to make a material difference in the fact that it's still cheap money. It still is going to allow people to borrow money at a very cheap rate, and it's not going to change anytime soon. It's not going to go to 5% anytime soon. It's not going to go to 3 or 4% anytime soon. So, in my view, they likely will raise rates in December just because they have to, and then they'll shut it down. They won't raise rates for another extended period of time. Now, if you look at the global side of things and you look at other central banks and they are at negative rates, they're doing that because that's the only way to spur the economy. And while we're lucky here that we don't have negative interest rates, we do have essentially zero interest rates, and we've run out of other bullets. And the only other thing that we have to fight off this, should we fall into an economic recession again, would be to go to negative interest rates. So it's not in the realm of possibilities for that to happen here. All of it is positive for gold, even just by keeping rates as low as they are right now. Even if they increase them by 25 or 50 basis points, it's not going to make a material change and impact the price of gold over a long period of time. If they do raise rates, gold will fall the next day or the day after. But if you start looking at the $20 trillion in debt that we have, and the fact that we've been interest rates at almost zero interest rate policy for an extended period of time, all that is positive for gold in the long run.
Absolutely. And what about the first 100 days of the Trump presidency? What are you going to be watching for, and how could any of these items potentially impact gold?
Well, we know that Donald Trump is going to come in there. It's going to be a little wild. He's going to make some changes on day one. At least that's what he says. And because of that, as an investor, you really don't know what to expect. And that way, and that's one of the main reasons you need to have gold in your portfolio, because the stock market will whipsaw back and forth based on what he says, whether he changes the policy day one or he intends to change the policy in the future. The stock markets are going to be looking for any sort of information to go one way or another, whereas gold will act as a more stable asset and it won't whipsaw, or if it does, it won't be to the extent of the stock market. So I don't necessarily know what to anticipate, but that leads to uncertainty, and that's why you should have gold in your portfolio, just as a protection, just a 10 or 15% allocation that you should have in your portfolio, just in case something happens, you're protected.
And what type of demand have you been seeing for gold and precious metals coins this year?
For 2016, we've certainly seen an increase in demand from 2014 and 2015. You have to remember, for 13 years in a row, the price of gold went up. And then we finally had 2 years, and now this will be a third year where the price of gold has not really gone much of anywhere. And so investors have short-term memories. They forget about what happened in 2008. And so in 2014 and 15, when the stock market kept going up and up and up, and to some degree even this year, investors are fine with just sitting with their money in stocks and not reallocating or rebalancing based on their own risk level, but also based on what's going to happen in the future. I think 2016, one of the reasons the price is up is because there's so much more demand from a retail investor. They do see what's happening on the horizon. They do see that we have a lot of policies in place that have created a tremendous amount of debt and will continue to create a lot of debt, stuff that we can't pay for, which will add to the deficit. And that is one of the reasons why investors realize that gold is an important asset to have. Plays an important role in protecting a portfolio that is heavily based on stocks, and they act as an inverse relationship, non-correlated. It's a way to diversify. It's a way to make sure that if something happens in the stock market, you still have an asset that's going to perform for you.
Right. And what about physical gold? I think there's a lot of people out there who maybe have never actually purchased, physical gold coins. What do people need to know about getting started?
Number one, it's incredibly easy, and we get this question daily because this isn't an asset that people are told to buy or learned about in college or learned about from their financial advisor. This is an asset that not a lot of people own. And so when they start looking around and realize, okay, this is an asset that I need to have, how do I go about doing it? They have reservations because they don't understand it. Well, it's very easy. And the process is simply you call up Blanchard, you explain what you're trying to accomplish from your financial goals, and then we talk about the product that's best fit for you. And then once we have good funds in-house, we lock the price in once we talk to the client, and then we package the gold up and we actually physically send it to the client. They receive it in the mail, they open it up, and it's theirs, and they own it, and they physically have it which is very important these days to actually have physical possession of an asset that you control.
Right. Now, that's very different, for example, than buying like a gold ETF. Can you talk a little bit about, the difference between, some of the benefits of physical gold ownership versus ETFs?
Yeah, once the gold ETFs came to the marketplace several years ago, it actually created a new amount of demand for the marketplace. So an ETF is basically a piece of paper that says you own a percentage of an ounce of gold that is housed somewhere in somebody's vault. Our issue with it is if you're trying to get in and out of the gold market in a day, an hour, a week, a month, ETFs are the way to go. What our clients want is a long-term stable asset, and physical gold offers that more so than an ETF. There are fees that are involved with ETFs. You don't really have control over your asset. So in our mind, the best way of actually owning gold is by owning it on a physical note.
And what about looking ahead to 2017? Any predictions for how high gold could go?
Well, gold's trading a little bit above 1,200 right now, so it is down from the election, which nobody saw. We are all anticipating that the stock market would fall and that gold would skyrocket. And during the night of the election, it did do that, but it has moved downward over the last, I guess, week or so. But we think that from a long-term standpoint, gold has a long way to go. If you think about where the all-time high was, and that was at 1908, I believe, 1910, somewhere just above 1900. So we've got a long way to go to reach that. We do think that it'll reach it. I'm not sure about 2017, but we think 2017 is going to be a positive year for gold. We need to break through that 1,300 level and look at it in the rearview mirror, and we'll move onward to 1,400. But we still think that it has a long way to go, even after 2017, especially with everything going on in the world. I mean, you just can't pick up the newspaper, turn on the news, and just get that uncertainty feeling. And when you have that feeling, as I said before, it's time to own gold. It's time to put that in your portfolio and make it work for you as a protection.
Absolutely. So really, these lower price levels really can offer a good buying opportunity then, can't they?
They do, and our clients are taking advantage that have bought at a higher level. They're buying on the dips, and if you're a new client waiting on the sidelines, it's hard to catch that falling knife, but you can see right now where prices are, and see that it's at a discount, and we've got some deals that they probably can't pass up.
Well, this is great, David. Thank you so much. Is there anything else, any last thoughts you might want to share with people who are listening today?
I think the only thing that I would say again is mention the uncertainty. Do you feel better with the new president-elect? I think everybody feels one way or another. However, whatever his policies may be, the uncertainty that's out there, the debt that's out there, the interest rate policies that are out there, the instability in the Middle East and China that's out there, what's going on in Europe with negative interest rates. I mean, there are a lot of glass balls in the air, and if just one of those falls, the price of gold is going to skyrocket, and it's important to actually be invested before that happens. So now's the time to call us, to get some gold in your portfolio, and make sure that your overall balance is correct, and to make sure that your risk level is correct, just in case something happens.
Well, thank you so much, David. This has been great.
Thank you very much. I enjoyed it.
Okay, we'll talk soon, and tune in next month for our next installment.